Welcome back to the channel, everyone. I'm really glad you're here today because this is an important conversation, one that a lot of people in crypto either don't want to have or are too emotional to look at objectively. Today, we're talking about Cardano, ADA, and why, despite all the negativity, fear, and frustration in the market, there are still analysts projecting price levels as high as $1.75, levels that many people right now believe are completely impossible. And honestly, when you look at current sentiment, you can understand why so many feel that way. The mood across crypto is brutal. People are exhausted, prices are down, confidence is shaken. And ADA, once again, has become one of the most criticized assets in the entire market, with people calling it dead, dying, or permanently irrelevant. But the truth, like it usually does, lives far beyond surface-level price action. This content is for educational and informational purposes only. Nothing in this video should be considered financial or investment advice. Cryptocurrency markets are highly volatile and involve significant risk. Always do your own research and consult a qualified financial professional. When prices are down, narratives change fast. Optimism disappears, and suddenly everyone becomes an expert on why an asset will never recover. Cardano has been stuck in that cycle for a long time now. Anytime ADA underperforms in price, the same talking points come back. It's dead, it's too slow, it missed its chance, nothing is happening. But what most people fail to do is zoom out and understand why prices are where they are, not just for Cardano, but for the entire crypto market. This cycle has been unlike almost anything we've seen before. We've dealt with extreme macroeconomic uncertainty, global geopolitical tension, persistent inflation concerns, aggressive interest rate environments, non-stop liquidation cascades, dollar strength, tariff-related uncertainty, and on top of all that, a complete lack of meaningful new retail participation. That last part is massive and severely underestimated. Retail never truly came back this cycle. Instead of fresh capital flooding into the market, we've been dealing with the same pool of money rotating endlessly between assets, while at the same time the crypto market itself has become far more diluted. There are more coins, more chains, more narratives competing for attention than ever before. That combination, no new retail and more assets, has suppressed price action across the board. It's not just ADA. Ethereum didn't hit most projections. Many blue-chip assets underperformed. Even Bitcoin, which did perform relatively well, barely touched the upper end of some expectations. Personally, I had BTC projected between $125,000 and $150,000, and while we approached those levels, the broader market never followed through the way past cycles did. That environment naturally breeds negativity, frustration, and disbelief. And yet, despite all of that, there are still analysts who see real upside. One example is CryptoJ, who recently highlighted a bullish technical setup for Cardano. According to his analysis, if ADA pushes toward the upper range of a broadening wedge structure, around $1.75, it could represent a 13x risk-to-reward opportunity from current levels. He's even stated that he's actively buying ADA or positioning himself to do so. That kind of conviction doesn't come from hype. It comes from understanding context. It comes from recognizing that markets don't move purely on emotion forever, and that extreme pessimism often creates the conditions for asymmetric opportunity. What's dangerous is how many people are so beaten down that they'd rather give up entirely than consider that low prices can represent opportunity. That doesn't mean prices can't go lower. They absolutely can. If we continue seeing the same macro pressure, the same lack of retail interest, and the same risk-off environment we've dealt with throughout 2025 and recent weeks, then yes, ADA and many other assets could still see downside. But lower prices don't invalidate fundamentals. In fact, they often strengthen long-term positioning for assets that are actually building. And this is where Cardano separates itself from chains that are truly dying. If you walk through the current top 100 cryptocurrencies, you'll see plenty of examples of former next big things that have lost momentum. SUI was once hyped as a future top-tier blockchain and climbed into the top 10. Now it's fallen well outside that range. Avalanche was a retail favorite in 2024, once ranked around 12th. now slipping beyond the top 20. Toncoin briefly captured massive attention and entered the top 10. Now it's struggling to stay relevant. You can keep going. Ethereum Classic, once top 25. Polygon Matic, once top 15. Algorand, Caspa, VeChain. Names that dominated narratives in previous cycles but are now steadily losing traction. These are examples of chains that are actually deteriorating in relevance, usage, and developer momentum. Cardano, on the other hand, tells a very different story. Has 8A permanently fallen out of the top 10? No. Has development slowed down? Absolutely not. Is the ecosystem expanding? Yes. Is adoption increasing? Yes. These are not opinions, they're measurable facts. Cardano continues to see major advancements at the protocol level, expanding stablecoin infrastructure and preparing for massive ecosystem growth. The Midnight blockchain alone reportedly has over 100 partnerships that haven't even been announced yet. That's not stagnation. That's delayed visibility. What's most important is that Cardano's core metrics are not collapsing. On-chain usage is stabilizing and improving. Developer activity remains strong. The fundamentals are forming a floor, even if price hasn't reflected it yet. You can claim Cardano is dead all you want, but dead chains don't keep building, integrating, and expanding. What we're seeing is a blockchain that has already gone through its worst phase and is positioned to benefit disproportionately when conditions improve. No, Cardano isn't processing Solana-level transaction counts yet, but Solana itself is slowing down. Ethereum may have first-mover advantage, but gas fees remain unacceptable for real-world use, with transactions costing absurd amounts, sometimes over $200 just to move assets. Cardano is quietly positioning itself as a scalable, secure, cost-efficient alternative with a strong research-driven foundation. That foundation is exactly what allows for sustainable growth, not just hype-driven pumps. This kind of progress doesn't always show up immediately in price. Sometimes it takes years. And I know that's disappointing for people looking for instant gratification, but even in ugly market conditions, fundamental improvement is what eventually pulls assets out of despair and into euphoric phases. I continue to believe Cardano can experience a Solana-level moment, a period where narrative, traction, and real usage align at the same time. People forget how dead Solana looked in 2022 before its resurgence. ADA has led markets before, and with supply tightening and development accelerating, the conditions are quietly forming once again. That's my perspective. Not hype, not blind optimism, just context, fundamentals, and patience. Hopefully that helps you understand what ADA and Cardano are actually building toward. If you found value in this breakdown, make sure to like the video, subscribe to the channel, and turn on notifications so you don't miss future updates. Your support helps the channel grow and allows me to continue delivering honest, in-depth crypto analysis.